Hi everyone, it's Mrs. Wallace. I just wanted to since we ran out of time and a couple people had asked questions at the end of one of the sections about tariffs, and I didn't want to miss maybe some of the key big takeaways, and some of you might have had questions, so useful to go through this and continue to ask questions. And again, later on in the year, we spend a little bit more time with international trade, and certainly if you get a chance to take macro next year, it becomes a hot topic. But we were looking, I think in class, we were talking about some of the institutions that became formulated after the end of World War II. And we saw GATT was, the General Agreements on Tariffs and Trades, is a very small group of countries that come together with the intent of really reducing discrimination in trade, reducing tariffs, reducing quotas, making free trade much more of a thing. So some of this is largely economic, kind of follows another conference that happened in Bretton Woods. It's also around the same time that the International Monetary Fund and the World Bank get initiated. So, all of these organizations are kind of overseeing some of the ways in which, initially how Europe was going to put itself back together. Some of the initiatives of the IMF or the World Trade Organization, of the World Bank, were really focused on specific things that were post-war, but over time they become either loaning money to the developing world, or perhaps in the case of the IMF, really getting involved in issues of countries' currency. So they play, large roles. And, for each of these organizations, there's pros and cons. There's a lot of opportunities for international discussion, a lot of opportunities for documentation of particular, kind of organized sets of rules that all of trade will live by. And there's even within the World Trade Organization opportunities for conflicts to get worked out. So I think in class we may have mentioned what happened last week with the outcome of Airbus, which is a, airplane company in Europe, and the European Union was, floating some very fancy loans that essentially subsidized Airbus, and the World Trade Organization agreed, and that was something that the United States had put forth as a conflict, and ultimately that took years and years and years for the World Trade Organization to decide on, and there's also, some reciprocal arguments that probably work against Boeing as well. But, tons and tons of cases kind of are in front of the World Trade Organization all the time. So there's opportunities there, but at the same time, there's a great deal of issues with the World Trade Organization. Not only is it incredibly slow, it actually, in the early 2000s, became much more difficult to continue to decrease tariffs and to continue to make more regulations standardized, as it became more evident that there was an interest in some countries to increase environmental laws or worker protection laws, how much there was going to be latitude to the developing world that was once given to the developed world, and how much trade would be contingent on particular laws. The Doha round is infamous for kind of breaking down, and every 2 years when members of the World Trade Organization would meet, there was essentially no outcome. It was like a meeting that was just going on and on and on and on, and that has led people in our contemporary time to kind of second guess the power of the World Trade Organization. But at the same time, like other international organizations, it has a great deal of strength at times and significant voice. And since 2013, there's been kind of an uptick in greater movement, a lot of general agreements for services, a variety of different initiatives that would be favorable to the developing world that have come across. So 2013 has probably been the most successful year in recent history for the World Trade Organization. Some useful things. In any case, the maybe other way to look at this, of course, is trade is also tied to the issue of national sovereignty. Not only is this something that the international community is kind of pushing for, and in the realm of kind of the big picture for those international organizations, we just see progressively over time more and more and more movements toward free trade. It's kind of been the story of trade, for the last 200 years, but that doesn't mean that there haven't been any barriers to trade. trade. Even before President Trump, there were tons and tons of, tariffs, quotas, sanctions, a variety of regulations, things that governments might have done to, serve a number of purposes. So, just to kind of go through the list that's in front of you, a tariff is essentially a tax, and, it has deadweight loss, just like all taxes do. It creates some issues of inefficiency. Economists notably hate tariffs because it creates distortion in the market. It leads to deadweight loss, and we essentially get, less in terms of the bang from comparative advantage as a result of tariffs. So when Donald Trump, in the beginning of his tariff spree, started spewing tariffs on specific products like aluminum, for example, that those tariffs were, really, economists came down hard and wrote an open letter. And I want to say about 1,100 economists signed that letter. It got sent to Congress, and the number of economists and how many people were against the tariffs, conservatives, liberals, just quite a few. It's something that economists generally agree on. Doesn't mean all economists agree about trade or the effects of trade, or especially what to do about the effects of trade when people are harmed. But to a large degree, tariffs generally don't do a great deal of good for a market. At the same time, countries politically often do seek out tariffs for a variety of reasons, and maybe there are even some good reasons for tariffs. Sometimes something is banned from a country because it's deemed dangerous to a population, some sort of biological agent that is going to infiltrate the forests of a particular country. So some things are banned for exotic animals or whatever, a variety of reasons, but oftentimes it's political. In some cases, it's retribution. It could be even used for foreign policy purposes. We see trade getting used in the form of like economic sanctions or even economic embargoes. So it has that aspect to it. Trade sometimes gets embroiled in that. But tariffs are often, in our last couple of decades, when they come about, oftentimes protecting particular industries, either startup industries, so a business sector that's just beginning, maybe some sort of new technology, and there's a need to protect it a little bit. Will other countries, recognize that? And so that might be a protected industry. And also, of course, just politically, groups of people who, may be chosen to be protected. And in the case of the steel manufacturers, right, or the aluminum tariff and things like that, there are particular firms that are benefited by those particular tariffs, and those particular firms, kind of speak to particular industries, and some of that is, political calculus. So tariffs have been the case for a long time, so it's not that Donald Trump initiated, tariffs, it's just the extensiveness of the tariffs, and in particular, even though the aluminum tariff, for example, that was, goes back about almost 2 years now, that was something that was set up, on American allies as well as on countries such as China, Canada, Mexico, and eventually, the tariffs, had changed. So some countries were imposed the tariff, then not the tariff. But, in the case of China, we have developed into an all-out tariff war, which is something economists warn. Tariffs tend to be reciprocal. So, in an effort to protect, our industry, we raise a tariff, and the tariffs can be different kinds. It can be a per unit dollar amount. It's usually not. It's usually a percentage, like an ad valorem tariff, and it could be 25%, for example. So the imports that are coming in, then that particular tax has to be paid to the customs, to U.S. government upon entry into the country. And things that get taxed, ultimately, it's very likely that we see a reduction in the imports of that particular good. And if the tariff was for the purpose of protecting domestic businesses, it can work. And sometimes tariffs are used and meant to be temporary. In that case, sometimes they don't become temporary and they stick around. And we have quite a few tariffs on the books in the United States that, if you looked at the list, would make no rhyme or reason or no sense. And partially because they're there and they have been there for a long time, it becomes kind of part of the system that people are used to. It's kind of like the mohair farmers. There's also quotas, which are basically limits to the actual quantity of goods, and this is not uncommon, especially with cars. There's oftentimes quotas on cars, and just like with tariffs, this is a way of reducing the level of imports so that domestic industries can largely be protected. There's the non-tariff measures. These are fairly common, and in the days of the WTO and GATT, a lot of countries started to lower their tariffs, and countries would kind of benefit if it's like a little game theory. If I lower my tariff, that's really good if you also lower your tariff, and then I'll lower my tariff some more, and that's really good if you lower your tariff too, and we kind of go back and forth, so it's not like a big old game of chicken. But in that effort, there was still an interest politically in protectionism, so there was a great deal of regulations, and these types of things are hard to sometimes penalize, because it's not always clear if a regulation is a domestic regulation, a particular good has to be of a certain type or has to be of a certain standard, or if the the issue is something that's just is it a domestic law or is it a protectionist thing? Similarly, are subsidies. So sometimes one way that the United States could prop up, say for example, dairy farmers, we could certainly tariff other producers, and part of the new Nafta reboot that the administration is looking for. Some of the issues are things related to American dairy farmers. So it's kind of like a hot group for the current administration. But the price of milk and whatnot hasn't necessarily been going up. And one thing the government has been doing for a while is subsidizing dairy. And in that case of subsidy, it becomes like, the government is giving out money to dairy farmers, and then that enables them to perhaps not have as high of costs and not have as high of a price. And that could be a benefit when on the world market, that perhaps some other countries, even developing countries that want to participate in the dairy market, would have a really hard time competing with that American low price. And it seems like every country has particular industries, especially agricultural, that they are subsidizing. And this was the issue that actually almost brought down the WTO with the Doha round. The developing world was particularly upset that there could be so many subsidies that would primarily, prohibit developing countries from participating in trade on a fair playing field, and they didn't have the same latitude to subsidize. So those are some restrictive measures. More kind of relevant, I guess, to us is not only what's happening with China. There's a variety of different things there, and some of this is also getting, kind of connected to foreign policy, but also because we have an election coming up, there's some other topics related to trade partnerships. So like another way that the government gets involved in trade, so, domestic governments, is by deciding not only to join the WTO, which has like 160 plus members, but is also whether to participate in a variety of trade partnerships. And these can be bilateral, so like the United States and Colombia, or the United States and Bangladesh, or they can be multiple countries. So, in the case of the European Union, right, there's, over 20 countries that are participating in essentially what's like a free trade bloc. They have reduced tariffs, they even have a common currency, they have a whole variety of things that they've done. At least some of the countries have participated to that level. But then there's also Nafta, which is a trade partnership between the United States, Canada, and Mexico that was started in the early 1990s. Very controversial. And these trade partnerships are complicated, and they also bring up a great deal of issues in terms of some of the things going on with trade. So I'll leave a video for you about NAFTA and the new NAFTA, but this is one of these trade blocs. It has pros and cons. So, on the pro side, you end up with a great deal more because of comparative advantage. advantage, a complete free trade zone between Mexico, Canada, and the United States. Certainly, this enables a great deal more trade, right? The border is not only, kind of a political conversation because of immigration, it's also a huge source of economic activity, and there's a great deal of, things, especially cars and a variety of different components. Some products are made partially in the U.S., partially in Mexico, and then back to the U.S. and back to Mexico. So people are crossing the, border daily to participate in business activities. And there is a great deal of trade that has increased. So looking at the actual dollars or the actual quantity of goods and services that have traded, the NAFTA agreement has definitely done that. So like on net,